Hello and welcome to Mint. I'm Nasrin Sultana and this is All Things Markets. As we are drawing close to the year 2019, we are looking at the big trends of the stock markets. And to understand that, I am joined by Jaideep Hansraj. He is the MD and CEO of Kotak Securities. So Jaideep, welcome to the show. So what are the big trends that you have observed in 2019 as far as the stock markets is concerned?
It's nothing else but safety, safety, safety. People want to be in complete safe zones with whatever has been happening in the financial markets for the last 12 to 15 months. I think people are not wanting to take risks of any kind with their capital and want to be in complete safe havens.
Right. But if I have to ask you a little more detail about the trends in which the market is headed towards, what would those be?
See, very clearly, I think people are worried about GDP numbers. People are worried about deflation. People are worried about the fact that are we getting into a recession, and there are these backdrops which are keeping the people constantly worried. At the same point of time, where does an investor invest his money? There are fixed deposits, there are liquid funds, there are arbitrage funds, but all are giving sub 5% kind of post-tax returns. So obviously, coupled with what I mentioned earlier, I think money will keep coming into equities. But at the same point of time, I think what I mentioned earlier, I believe people will want to be safer with their money than be slightly adventurous. So I don't see people putting money in mid-cap, small caps right now. It will still go back to your top 20, 30, 40 names.
Moving on to the actual stock markets, mid caps and small caps did not participate in the rally at all in 2019. And
They didn't in 2018 as well.
As well, right? And 17, the kind of euphoria we never touched there. What do you think went wrong with the smaller stocks?
I think it was valuation, it was liquidity, it was a combination of all of that. And if you want to exit from a Reliance Industries, you know that you can exit any time. But if the exit were to happen from a mid cap or a small cap stock, then obviously it's going to take time, and that created the whole host of issues. So I think it was a combination of a lot of things. I think it was a combination of the fact that people weren't seeing returns in mid cap, small caps, which made them exit. And once exits were happening, it was a self-fulfilling prophecy. People were selling, and when they were selling, there was no liquidity, so stocks kept falling. If you ask me, I don't see that trend reversing very easily, very soon. I think it will take time. I think once people see some growth happening in corporate India, or some growth coming about in the GDP, it's then that people will have the confidence of moving to mid cap, small caps. Till then, I think it will still remain big is beautiful, and they'll continue getting more and more money from both mutual funds as well as FIIs.
So, FIs are kind of, getting to the bigger stocks, and the smaller stocks are not getting the benefits of higher FI money in India. You see this trend continuing even, with the improvement in the macro economy?
If it improves, then I think small cap, mid cap will start doing well.
Okay.
But everyone's waiting for that magical day when you see GDP numbers which will reverse. Because till now it's just been a one-way down kind of a situation whenever the quarterly numbers of GDP have been announced. The GST numbers haven't shown any significant improvement. Auto sales numbers haven't shown significant improvements. They've all been more on the downward trend. So I think everyone's waiting for these numbers to show some kinds of positivity.
As we move ahead to 2020, where do you see the stock markets going ahead?
We've put out a Nifty number of 13,400 for end calendar 2020. This is based on our estimates of what growth would happen in the Nifty companies and what do we assume the valuations for the Nifty should be.
Right. And you don't see the smaller stocks participating in this rally?
As I said, I think it's still going to be wait and watch for the small cap, mid cap. If you see growth in the broader economy, whether GDP numbers, auto sales numbers, cement numbers, commercial vehicle numbers. It's only then that people will start dipping their toes in small and mid cap.
Right. In the last few months, FIIs have been, of course, coming to India, but DIs to some extent are selling, and they're actually overall net sellers in Indian markets. So, what exactly is kind of worrying the DIs?
It's actually going to be a flow dependent thing rather than the worry which the fund manager has. I don't think if with SIPs at the 8,300, 8,400 crore per month kind of levels, it's very clearly that the domestic mutual fund industry is getting a lot of money and has been continuing to get a lot of money now for the last 2-3 years. So if you ask me, I think they have been sellers for the last couple of months, but I still think that if the flows of SIPs continue to be as robust as they've been, I don't think domestic institutions or domestic mutual funds will be sellers for too long.
So, you see this gush of liquidity continuing in the next year as well?
It's a tricky one. It's all going to. I'm going to give you a convoluted answer for this. It's a catch-22 situation. People don't have option of where to put their money because of the interest rates being at very, very low levels. So equity is one of the better options. Within equity, what are the options?
So it's a Tina effect. There's no alternative.
I wouldn't call it as dramatic as that, but yes, they have very little option, or from a interest rate point of view on fixed deposits, etc. At the same point of time, when they see equities, they see that only large caps are a safe place to go to because mid caps and small caps have been hammered in the last 18-24 months. So it's a self-fulfilling prophecy that people are putting more and more money where everyone's putting money.
On that note, Jaideep, thanks a lot for the lovely conversation. So, a lot of big trends to watch out in the year 2020. Kotak Securities expects the Nifty to be around 13,000 by the year end of 2020. We'll watch out for all the big trends in the year ahead. That's all for now. Thanks for watching. For more details and updates, stay tuned. Also, Mint wishes all its readers and viewers a very happy new year.